Hey everyone, J3 here, and in this video I'm going to teach you the strategic averaging method, investing the Truly Rich Club way. And all of this is actually based on the samquickstart.pdf, and that should be one of the files that you can immediately download in the download section of the members area of the Truly Rich Club. So what we're going to do here is just go one by one on the 5 rules for the SAM investor. Okay, again, SAM stands for Strategic Averaging Method. Rule number 1 is invest small and slowly, buy at buy below prices, stop buying beyond the BBP or the buy below price, sell at the target price or TP, then reinvest your profits. Okay, so we're going to tackle this one by one. First, invest small and slowly. So basically, if you have 300,000 pesos or less, divide that portion into 6 months and invest it 1 month at a time. So that would be around 50,000 pesos per month. Take note, this is if you have a huge amount of capital already. Now, if you have more than that, what the Truly Rich Club is suggesting is that you divide that portion into 6 months. So if you have 1 million to invest, then divide it into 12 months or more. So again, invest it 1 month at a time. Now, if you're just starting and you have less than 6 figures, you're going to save your salary, then what you do here is that you keep saving what you can and invest regularly. It doesn't matter how big or how small you're saving. What matters is that you're saving and you're investing regularly. So you build the habit of investing. Now, here's the logic behind investing small and investing slowly. First is that you need to be comfortable with the amount that you invest every month. Just imagine if you invested all of your life savings into one stock and then in this one particular time, you won't be able to sleep. So for that not to happen, you divide your money into equal portions. Now the next reason is that you need cash for opportunities. When the market dips, stock prices are cheaper and essentially they are discounted price wherein you can accumulate lots of shares of a great company at discounted prices. So again, you need cash to be able to take advantage of those opportunities. Now with this, some people ask, well, why don't I just wait for the dip and then that's the time I'm going to invest? Well, you don't know if there's going to be a dip. So invest regularly, invest in small amounts, and invest slowly. So if it goes up now, just invest. If it goes down 1 month from now, keep on investing. If it goes down or up 2 months from now, just keep on investing. Our next rule is buy at buy below prices. Each stock's update will contain the SAM tables. It's going to look something like this. And the way you follow it is that these are the stocks that you buy, and you buy them only if the price is below the buy below price. That's why it's called the buy below price. Remember that in order to make money, you need to buy low and then sell high. So if you buy at a high price, then there's little room to make more money. Because if you buy high, you would need to sell higher, and that would be a harder thing to do. So the buy below price will ensure that you maximize every peso you invest into the stock market. Now the next rule is stop buying beyond the buy below price. So here are the guidelines. When the stock price goes higher than the buy below price, stop buying, because that means it's already expensive. That means there's little room for growth at that particular price. What you can do now is buy other SAM stocks which are still under the buy below price. There are usually 5 to 10 SAM stocks at a time, so just take your pick at the cheap ones. Then the last step is to patiently wait for the stocks to reach the target price. I will stress this further in the next rule. The next rule is sell at the target price. And here are a couple of things that you need to know. Be extremely patient. some stocks will take a long time to move. For example, there will be some stocks that will reach the target price within several months, 1 or 2 months. That has happened. But there are also some stocks that are really, really slow moving. But these are great companies. It's just that the stock price hasn't catched up to it yet. So for example, in my portfolio, one of the stocks about a year ago was FPH. And FPH was, well, it was a great company. It was recommended. And for the longest time, I think it was about 1 year, the stock price was not moving. Now, fortunately, what I did was I kept on buying, because it was still below the buy below price. So I kept on buying and I kept on buying. Then, lo and behold, 1 year later, FPH shot up. Now, my FPH stock is at almost 40% gains. So even if it was slow at first, it's going to pick up. So just be patient and keep buying. Now, when the target price is reached, you sell it. Okay? It may go up after you sell. The stock may still go up after you sell. It may go down after you sell. But anywhere it goes, just be grateful. When the stock price is already near the target price, that means you have made at least 10-20% of your money already. So just be grateful. A couple of centavos, a couple of pesos won't really matter anymore because, you already made a good margin. You already made good money. So just be grateful. Okay, it's a lot more stress-free that way. Then finally, the fifth rule is to reinvest your profits. Okay, what does that mean? When you sell, you'll have lots of cash available in your portfolio. Now, what you're gonna do is repeat step 1, which is invest small and slowly. So divide the cash you got from your investment in a particular stock and divide that again into 6 to 12 portions and invest them slowly into the other SAM stocks. Essentially, this is just the cycle of the SAM strategy of investing the Truly Rich Club way. Now, I have one more rule for the SAM investor. This isn't really formally written in the Quick Start Guide, but I've noticed that throughout the years of being a Truly Rich Club member, it's something that you have to follow. So I'm just helping you be familiar with it. So number 6 is follow the switch, sell, and hold alerts. What are those? From time to time, things don't go as predicted. So not all of the recommended stocks are going to win. So alerts are sent to enable the members to react to the changes. So when the change is bad, a sell or switch alert is sent to your email. And what that simply tells you to do is to sell stock X, okay, whatever that company is, and reinvest it slowly to another and the better company. Okay? So that's the switch alert. That's the sell switch alert. When the change is good, meaning it wasn't as predicted, but the change is still positive, a hold or upgrade alert is sent. What this basically means is that a new target price is given, a higher target price is given to the stock. So when that happens, just hold it, hold on to the stock. And same as the switch alert, this hold and upgrade alert will be sent directly to your email. Now here's the logic behind the alerts. The goal of the SAM is to maximize the use of every peso that you have invested. So it's basically ride on the winners and cut off the losers. Basically, if they foresee that this stock isn't going to make any money, then it's going to be cut off. Now, please do not get attached to the stocks. If it's a loss, sell it and make that switch, because it's a way that you will be able to put your money in a more effective company, in a company that will make more money for you in the end. So when you switch, you will be reinvesting it into a winner. Now, that's all of the rules. They're very simple to follow. So that's it. Thanks for watching this video, and I hope you learned a lot.